is one of the branch managers at our, not one, he is the branch manager for our Burnsville location. He's done some classes for me. He helps co-partner when we go into some of these classes. He also leads classes on his own. He's a really good presenter. He's been doing banking for a long time. I won't tell you how many years because that might give away his age. He can do that if he'd like. But I'd like to introduce you to Dave Paradise. I'll have him come up and we're going to talk to you guys today about credit cards. All about credit cards.
Thanks, Kim.
You bet.
Good afternoon.
Hello.
So I'm gonna do a lot of just free disclosure today because I think transparency is good in a lot of areas. Real fast bio. I was born and raised in California, in the desert, not the sexy part, but out in the Mojave Desert. Think earthquakes last month. That was my parents' hometown. They still live there. At 24, I joined the Navy because I wanted to see the world, and I did that for 22 years. So during that time, I had a lot of really great experiences. My wife was lucky enough to meet me during that time, I tell her. I landed in Minnesota because of the Navy. I got sent up here to be in charge of the production side of enlisted recruiting. And I thought, oh my gosh, I hope I don't die because it's Minnesota, right? I'd seen grumpy old men. I knew what happened up here, and then we fell in love with it. We just didn't want to leave. In 2008, I retired from the military sooner than I planned on it. That was 22 years. And we had kids in school. My oldest at home is now going to be a junior at Lakeville North. My middling will be a freshman at Lakeville North, and my youngest will be a sixthlet at Kenwood Trails. And so this is our chosen home. I say this is a frame of reference, not a boast, but it's important for context, right? I've been to 72 countries and 46 states, and we chose this to be our chosen home for many reasons, right? And there's things about Minnesota that you guys maybe take for granted or maybe appreciate, but it's a wonderful place to live and raise families. And the employers in this area, like yours, have amazing things like 401k plans and benefits. I have family members living around the country, and a lot of companies don't have the benefits and packages that we're blessed generously with this in this area. We also have a lot of shame in Minnesota, right? Because what I realized in the culture, particularly coming into a recruiting environment, did a lot of presentations at colleges and high schools and VOTEX, and there's a couple of stigmas, if we're honest about Minnesota. One of those is, you gotta get your college degree, or you're a failure. That's an underlying thing in Minnesota. You can't have any credit card debt, or you're a failure. You can't take a mortgage into retirement, or you have failed, right? If you make bad financial choices, then you have a weak character. And I see it and I feel it, and it's an underlying nuance, but there is this certain Norwegian judgmentalism, not towards one another, because that's part of living in Minnesota, but in the mirror, right? I was sharing with Jen before class, I was, in my undergrad degree of psychology, the professor asked us one time, if you had, forced choice question, to release your entire medical record on the internet or your financial record, which would you rather have? The class consensus was medical. And so I asked Jen, why do you think that's true? And she's like, oh my gosh, I can't answer because I'm Minnesotan, but I'll give you a vague answer. But that's a highly personal question, right? And as I said it, I'm looking at your eyes, and many of you were like, oh my gosh. It's a thought-provoking question. For 2.5 years before joining the Navy, I played poker for a living, and that taught me how to pay attention to people. And I genuinely like people. So some of the things I say, if I'm running down a tangent today, it's because somebody just gave me a look like, would you park there or would you run away from that topic? And either way, we'll probably stay there for a minute. Okay? In my time in the Navy, I met my wife in 1995, and between the two of us, we had about $130,000 in credit card debt. I had no unemployment stories, no medical issue stories, no bill stories. I had a fun story. It was really fun charging all that up. And we made all our payments. And I just kind of didn't care. Had a great job and a great paycheck, and life was good. And I was actually on shore duty at the time. I was managing the poker department of an Indian casino because I had time in my shore duty job. And she came to work for me as a poker dealer, and we met, and cash was good. And I mentioned I played cards for a living. So the income was not a problem, but then I became aware of the concept, which is true. And it was in a book by a guy named Dave Ramsey. In the first chapter, he says, you can't out-earn stupid. So I offered my picture for that chapter, but he refused. My point was I had a really good time getting there. I had no shame, no guilt, no remorse. I just didn't care. Well, then we started talking about getting married and having kids. And suddenly that caring, that irresponsible choices I was making became a very real obstacle. And so 5 years later, we celebrated with more wine than we should have, and it was done. We got rid of it. So I'm the authority on what it feels like to be in debt. I went from not caring to caring a lot. I went from caring a lot to being stressed. What didn't stress me before suddenly stressed me. I learned a lot of rules about credit cards. Here's something kind of twisted. I was in my master's program in business administration before I learned how finances work, right? You'd think with 2 college degrees already and pretty good education that I would have understood finances, and I didn't. Suddenly my eyes were open, and that kind of what drove me into a career in banking. So I've been in the banking thing since 2012. I worked with our Premier Services, where we're kind of making advisory recommendations to what we call a wealthy sort of middle segment, and got to know a lot of people and their nuances and their preferences. So that's a long introduction, right? But I wanted to lay it all out there and say that what we're going to talk about today, the topic is credit cards, but there's something underlying that. So we're going to flip through these slides somewhat quickly because I want to field your questions, and there's some structure that we should understand about credit cards. So one last thing I'll say before jumping into that. A credit card today is a method of conveying payment. So I'm going to park there just for a second. It's the #1 method of payment conveyance in America right now. Borrowing and lending have been around for a long time. The first evidence of borrowing and lending can be found in the Jewish Talmud, in the Christian Bible. In the 1792, there's writings in the Hammurabi from Iraq that gave specific rules of what could be charged of interest to lending seeds to the farmers who couldn't pay until things were harvested. Very specific rules about rate of interest in terms of payment and repayment. So all of these documents codified the process of borrowing and lending and put some constraints around it. What's acceptable and what's not acceptable. Today we call that predatory lending laws or usury lending laws or usury interest rates. There's a lot of structure still in our society, but when you talk about commerce and credit, they kind of go together. The first time the guy who raised goats wanted to buy a cloak, but also a piece of furniture, those three had to get together and figure out some way to make trade happen. So that's kind of before credit was established. Once credit was established, I could go buy goods and materials with some sort of currency, whether it was a physical currency or something like that. Today, really, our world's virtual. How many are on direct deposit? Yeah, so it's a virtual thing, right? When my son was about 6, I said, he wanted to go somewhere. I said, I didn't bring any cash. He said, go take it out of the wall. There's an idea. Credit cards, as we know them today, didn't really come around. It was kind of cash currency conveyance until about the 1940s and 50s. The airlines began by giving people these like shaped tokens. They were metal things actually, and they could imprint those on things and make a stamp or a seal to verify that's who you were and that's your form of payment. Airlines did that first, and then Diners Club in the 1950s had the actual first credit card where you could go buy something from a retail merchant. So it's okay if I give you a card, but what if you guys don't take it? So this has to work hand in hand. Now, why would you as merchants give her some meal or merchandise or benefit when you haven't been paid yet? When she's just going to offer you a token or today a piece of plastic? Well, because you want the money. Competition among vendors drives where currency goes to and the transaction process. So we went to credit cards in the 1950s. Diners Club, American Express shortly followed. Sears was the first company to issue store cards, store charge cards. Took a lot of losses, but made a lot more profit than they lost. So that evolved in the 1979. We had e-commerce. Somebody gambled and said, I think we can make people pay through the internet. And originally it was like, that's never going to work. And today Amazon crushes it, right? In 1980s, cards began having magnetic stripes. In the 1990s, in the rest of the world, they had chips. In 2012, the US got chips. I found it ironic in all the countries I traveled to. I lived in Belgium for 3 years. In 1991, all my bank cards had chips in them. Every country in the world, China and the United States, were the last two to put chips on their cards. They're the lengthy story why. But we lag the world in banking by about 20 years. We do. The method in which we convey payments is really, really behind. So, I won't get into the overregulation topic because she's recording. But today we do payment a lot of ways. Most of it is virtual. So we take the advent of credit cards, the establishment of a process of credit cards where I can pay for something out of convenience or out of immediacy, an immediate need. It could be an impulse purchase, or I don't have the money I need for the new air conditioner for my house, but I can put something on a method of payment that now I have a debt. But it's also the most convenient and secure way to do that. Frank Abagnale is the guy whose life was featured in Catch Me If You Can. True story, true man. We had a chance to meet him and talk to him. And he has a quote. He says, I use a credit card not for every purchase, but I would never not use a credit card.
Yep.
every single purchase he ever makes. And the law is, and he points it out, you can run up $1 million in false charges on my credit card. My legal liability is 0. You are always 100% protected from credit card theft or debit card theft. Somebody steals your wallet and the cash is gone, it's gone. Somebody writes bad checks against your account, counterfeit or fraud, you may not get your money back. You swipe with a piece of plastic, you are 100% guaranteed to be made whole. On a credit card, they must remove it from your bill, unless they can prove it's yours. On a debit card, there's a process, but you will get your money back. So while we're talking about credit cards and the taboo of debt and things, I want to stay on this just for 1 second and say, as a method of payment, as conveying payment, I never use anything other than a credit card. And it sounds like somebody who was a former alcoholic to be sipping from the bottle, right? I ran up all that debt, but that was a different mindset, an I didn't care mindset. Given no oversight today, I will gladly tell you and unashamedly say, if I wasn't married to my wife and we didn't work in tandem, I could quickly run up another 100,000 in credit cards because I don't really care about money to an unhealthy degree. It doesn't have value. We have a tendency to be very generous in our household because I don't care, and I'm probably not on this side of the dirt going to begin to care. So it's a wonderful thing that we're actually very philanthropic, but it's a terrible thing because I'll spend everything as soon as I want to and don't care. The beauty is I have a wife that we know that by me having the cards I use, we maximize our points and our miles and our cash. Last year we ran $56,000 through our credit cards, but that paid for everything. I used that for my homeowner's insurance, for my auto insurance, for everything but really life insurance because you can't pay life insurance on credit. In doing that, we got almost $1,500 in cash back last year. But here's what we really got. So let's say Kim is selling basketballs. And Beth buys a basketball using her debit card. Who paid Kim? Beth paid, right? And it came from your account.
$20.
Now I will pay her with my MasterCard. Who paid for the basketballs? MasterCard paid for the basketballs. I'm not even Kim's customer. She doesn't know me. I don't owe her any money. I made no payment today. I paid nothing, but MasterCard bought those basketballs. So you get to be my hacker, and 6 months from now you come and you hack into Kim's computers, and you go buy, I don't know, 4 or 5 big screen TVs. They came out of Beth's account because you used her card. Now she has to do a process to get her money back and maybe close her checking account, reset up her direct deposit, call those people who have checks outstanding that might get bounced. There's a lot of debris. You also went and got a big entertainment system on my credit card. But see, you don't have access to my money. You have access to MasterCards. So I call MasterCard and say, I didn't buy this $5,000, $8,000, $10,000 of stuff. And they say, all right, we'll take it off your bill. So by putting a MasterCard vendor in between me and that merchant, today I drove through Taco Bell because I'm eating healthier now.
They were number 1.
That's sad. But I didn't pay for my food yet. I'm not Taco Bell's customer. MasterCard is Taco Bell's customer. And because I did that, MasterCard's going to pay me some money at the end of the year. But that's the security of transacting with what we call credit cards. It's a method of conveyance of payment. They're superior. Bitcoin's come onto the horizon now. In 2008, we now have, who uses a transaction method other than cash, plastic, or checks? Venmo, yeah, electronic payment forms. Swipe your phone, scan your phone, wave your phone, Venmo, Zelle. These are all systems of electronic conveyance payment that don't use plastic at all, and that's growing. Commerce with no physical plastic card is a growing way of conveying payment. So it will change. Bitcoin's on the horizon. Right now it's a great place for money laundering, terrorism, and drugs. Will that ever change into a regulated currency? I don't know, kind of don't think so. But there's different methods of conveying payment. In today's world, the most superior is the credit card because of that anonymity it provides you, because of the rewards. Now, having said that, many of you, I can just tell by your faces, going, that's a bad idea because you can incur debt. Yes, you can. Just like driving a car, you can incur a DUI if you're undisciplined. You could drive a car in Texas today and get arrested or kill somebody and go to jail. So it's not the driving of the car that's bad. It's not the paying with a vehicle of a credit card that's bad. It's the way in which you handle that. So the goal today, after that really long, 13-minute introduction, is to say, let's get into the nitty-gritty of that. And I wanted to have this be an open forum for questions too. So we're going to flip through some slides here that now go to credit cards, their use, how they're set up, how they're structured, and maybe prompt some questions for you. So Kim, do you want to whip through some of these slides?
I've been whipping through them as you've been talking.
Perfect. So then we're done with our PowerPoint.
Yeah. I think this is the one we wanted to land on though real quick here. here.
Yeah, let's do that. So tell me, and it's a safe format in here. You guys will gossip when I'm gone, but I won't.
Yeah.
Whatever you tell me is private. But no, seriously, what questions do you have on this topic of credit cards? It can be anything about rate, structure, competition, how they work, how the interest is calculated, whatever. What questions can we answer? And we don't get to start again until somebody asks one. We'll get past that Minnesota silence.
What's
Yes.
considered a good rate if you have really good credit?
Yep.
Interest rate, what is considered good?
With most lenders, if you see the TV commercials for highly qualified buyers or best rates will be, typically we're talking 740 or above for most banks and most vendors and most products. Some will tier their prospects to 760, 780. People with scores of 580 can get credit cards that are probably going to be secured by your own money or have really exorbitant annual fees, or they'll have riskier terms. If half of you have been in 3 or 4 car wrecks, do you expect to pay more for your insurance? Right? Those half that don't will have better rates on their insurance. Now, of those that have had 3 or 4 accidents, some of you, I see I'm just making you guys the bad drivers. Some of you may never have an accident again the rest of your life, but you're in a higher risk group. And over time, you may prove that you're no longer in that risk group. So a credit score is an indication of risk for the lender to not be repaid. The greater the risk, the greater the interest you have to pay, because you've got to pay for the interest in the other people in your group who will not pay. And that's really how credit scores and things are entered. Do we have a slide on credit scores? I'm going to jump to that for a second.
Okay.
Credit scores shift and change. Credit scores come primarily from a couple of places, but it's really important to know, how many have heard the term FICO, right? You've heard the term FICO. That's Fair Isaac Corporation. It's not the U.S. government. It's not the U.S. banking system. It's a for-profit company called FICO. Fair Isaac Corporation assigns a credit score to you. And when they started doing that, the government said, we need to regulate that because that's really personal information.
Sorry, this PowerPoint is scrolling and not going to the next slide.
Quite all right.
It's kind of distracting. I'm sorry.
So, I don't want to spend a lot of time on it, but it's really important. So your credit score is not an indication of your character. Can I just say that? Please don't ever be ashamed of your credit score or be proud of it. It's a score. It's not an indication of character. Some friends of mine lost their 5-year-old to cancer about 6 years ago and went bankrupt. Are they unreliable or untrustworthy people? There's a story behind what happened to them. In 2010, 70% of contractors in Minnesota were unemployed. You can't pay your bills if you don't have an income, right? So those people in that category, particularly builders, took a terrible beating on their credit. Now, some people have credit scores that were more like mine. I think I got down into the 530s at one point. I always paid my bills. I did not pay anybody, but the rates were so high that at a certain point, I'm paying really everything I'm making almost in interest, which makes me, I was at that point of just tipping over, not paying people, so my score was low. As I started paying debt off, my score just skyrocketed. So the number one factor in your score today is how much money is available to you on your credit that you are not utilizing, because that demonstrates discipline, right? Let me say this also, having a credit card, and credit card companies will tell you get a credit card to increase your credit score. It's really not that easy or true necessarily. There's more to it. The only element credit cards bring that's positive to the scoring model is age of the account, how long have you had it, and what's the percentage of balance that you're not using, right? So if you have a $10,000 credit card and you use more than $3,500, your score will start to suffer because you've exceeded 35% available usage. If you have 5 cards totaling $10,000 and the combination of those 5 exceed $3,500, your score will start to drop. If you get that usage to $9,000, it'll drop precipitously, and it'll come back up when those balances are paid. So the biggest factor, it's about 30% or 35%, depending on if it's Experian or Equifax or how they want to calculate those numbers, is based on how much of your credit is available based on what you have available to you, because that indicates spending beyond your current means. So it's a risk factor. The other part that's really significant is your history of payments being made. So on your credit report, there's R's, and that's your revolving accounts. MasterCard, store charges, anything that revolves. Because I could have a credit card for a year, and I have many of them, and I never use it, so the balance is always 0, so it never has a late payment, but that's no evidence of a payment getting made, because it maybe wasn't one due. So credit cards do not prove that you can make payments. They prove you can control your spending. Because many credit cards never have a payment. Installment loans, car loans, personal loans, student loans, those always have a payment due. The terms of the contract are there's a payment due every month. When you see a 12-year history of an installment loan with no late payments, that person demonstrated the ability to make payments on time and on schedule. So that's about another third of your score. Are payments getting made on time, on schedule? Check, great, here's a score for that. How much credit do you have available and you're actually using? That shows self-discipline. Check, there's a score for that. Then there's some other 5%, 10% here. Credit card companies mostly use a score called Vantage. The maximum score there is 990. So when you log into your Capital One or your Credit Karma, it's really important to say, am I looking at the FICO 8 or FICO 9 calculation, or am I looking at a Vantage calculation? Because those scores can be different by 100, 150, 200 points difference. When you buy a car, most dealers use what's called a beacon score, another method of scoring the same factors. When you're buying a house, it has to be a FICO score. That's a US regulation. It's a Linda regulation. When you're getting a credit card, most companies use the Vantage score. So there's different models to look at the same information. Think of it like you're all a bunch of professional athletes. Some of you may be swimmers or tennis players or golfers or football players. You're all professional athletes. We're all consumers, but the purpose for which we're extending you credit, is it a home, a car, a credit card, a student loan? Those are all calculated differently because your speed and your strength and your endurance are calculated different for the need. That's kind of an example. It's a great question, but I wanted to park on that credit score thing just for a second, because that's how it's figured out. And Beth spoke briefly about the option for checking accounts with us. I would highly encourage you to add us as a secondary bank, right? Because many people, I'm not switching banks. We know from studies people don't switch banks. It's a pain, it's a headache, it's a hassle. You get used to somebody, and you stay in that relationship. Even when it's bad, you stay with them, right? But you might add us as a second bank, because we really deeply believe in helping our clients with personal as well as business financial decisions. We never charge for advisory services. You can call me anytime. I should have brought some cards, but you can reach us through Kim or Beth. Beth does a great job. I really believe all the coworkers and the people I work with are excellent at meeting with you one-on-one and in private, helping you move forward, whatever you want to move forward. I don't know how many of you ever go to WebMD to figure out your prescriptions, but that's kind of how most of you are probably doing your finances, right? I'm educated. I don't want people knowing my stuff. It's kind of private. I can Google, I can Yahoo. Well, that's just like WebMD for your doctor, right? See a professional that's not going to judge you, and it's going to give you some honest answers. Okay? Yes, please.
Speaking of credit scores, how much is your credit score impacted if you close a card, and then what's the advantage and disadvantage of keeping a card open if you don't use it?
Two great questions. I would never keep a card that had an annual fee, and I would never close a card that doesn't. There was a period of time when if you were going to buy a home, there was a payment factor applied to your available balances. So if I had $100,000 in available credit cards with a zero balance, the lender would calculate an estimated payment based on those zero balances and apply that against me on cash flow. So when you're getting any loan for anything, even a credit card, there's a couple of things. Maybe there's a slide on that somewhere. But, oh, by the way, that's a great resource. When you go there, you get one free credit report a year. I would recommend TransUnion. You have three choices: Equifax, Experian, TransUnion. Most people in the area we live in Minnesota are going to use TransUnion. They're all three the same thing, but they score a little bit differently, so a little variance. But it's a good thing to look at it because you want to see what's out there that's being reported about you. Frank Abagnale does a great job of explaining and I say this with an absolute, I know I'm an authority on this because I'm quoting other authorities. Every one of your social securities are on the dark web already. Every one of them. If not through any, Target or Home Depot or any breaches or not Experian, the U.S. government has compromised the IRS records, Social Security records. State of Minnesota had 40,000 health records compromised last year. Experian just had 100 million people who got Capital One, 100 million applications. On the Capital One breach, by the way, nobody found out any information about you today, but if you applied for a Capital One product from 2004 until the present, they have your application, which is name, birthday, social, where you work, and what your income is. That's what was compromised. But every one of you, your information's out there. You accessing it does not increase the risk. It means you should go and see if what's out there is correct. So I highly encourage you to go to the annual credit report thing and take a look at that. It's just self-defense. On that topic, when Frank was here talking to our bank, he asked how many of us have some sort of protection, some sort of lock on our Social Security number. He recommends that. I did it after I listened to him. But you should put a lock. There's companies that will do that. ID Guard, Safety Shield, ID Shield, LifeLock. They're all out there advertising money. Well, it's just well spent money. It's insurance against the most horrific case. And yes? Yeah, so you can do freezes at Experian, Equifax, TransUnion, all three individually, separately. It requires 3 different logins. Or you can go to a company like ID Shield or ID Guard, and they'll take care of all 3 for you. Now, they're going to charge you a fee, but you contract with them and they will take care of all that. Yes, it's not so much that people are going to go out and get loans in your name, because banks have their own systems to check that, and credit card companies. The rapidly rising threat is student loans, government entitlements, food stamps, medical care. Medical care is a rapidly rising form of fraud. Think about it. I told you I have 3 sons, right? I can bring any child that went to any hospital and say, this is my son, and get him medical care. What do they ask for? Social and a birth date. They never ask our children for IDs, which brings me to the point Frank made. He asked in the room of a whole bunch of financial experts, how many of us have this same protection for our kids? Not a hand went up. And he said, just so you know, and he says this in his videos, I'd encourage you to go to YouTube and watch Frank Abagnale videos. Just Google him once. He's got some great speeches out there. He's fun to listen to. But he said a 63-year-old multimillionaire with variable holdings and assets will go for about $250 on the dark web, with 2 or 3 pieces of verified information. A 2-year-old goes for $2,500. Some of you are going, what? If I get a 2-year-old's social, birth date, and city of where he was born and his parents' names, what can I do with that information? Your kid just became mine. I can enroll him in school. When the time comes, I can get him a job. They can start working at Chick-fil-A like my 14-year-old, I'm 16, did when he's 14, just what's your social and your name. They can become your children before your children realize it when they're 18 and apply for something and they say, oh, well, you've had credit for 4 years already. The risk is to kids because they're unprotected, and it goes under the radar and we don't know it. So I added that LifeLocker. I use ID Shield, all my kids' socials. Cost me more money, but I'm like, that's alarming. I'm not an alarmist, but that did concern me, so I'll share that with you. You do want to lock your credit to prevent other forms of theft. Frank shared with us, this was in 2016, I think he was here, that the year prior the IRS had sent 1,700 checks to the same address in Russia for tax refunds. Again, I have clients that have submitted their tax refund and been told, oh, it's already been paid. You need to lock up your socials. Yeah.
And to answer your question about closing an account, so what happens is if you close your credit card, even if, like, let's say you don't use it, and you're just like, I don't even know if I want this anymore, and the reason he said if it has an annual fee, just close it. When you do close that, you can take a little bit of a ding in your FICO score, but it's nothing that won't bounce back. So it's an easy one to do, and like he said, if there's an annual fee, you should close it, because you shouldn't be paying an annual fee. If there's no annual fee, no need to close it. When you do close it, the length of history that you had that credit card goes away. So let's say, for example, you got a credit card when you're 18, and you've had it forever, and it was like your first credit card, and you close it now and you're 30. So that whole length of history goes away. And so it's sometimes good to keep that credit card that you had when you were 18 because you've established a history of payments in there. But that's a great question to ask a banker, just because sometimes it may make sense, like if you're paying an annual fee on that card, if you've had it for a long time, let's say you have had that, you got it when you were 18, but you're paying an annual fee, I would absolutely call that credit card company and ask them if they could switch you to a different type so you don't have to pay that annual fee. Maybe there's a way you can get rid of the annual fee without actually closing that line of credit. Does that make sense? Does that help?
Yeah, with those cards, do you have to be, like, when they expire, do you have to be reactivating them every time, like, you're sent a new one then? Or, like, what if you just don't
If you're not using it?
Yeah, like, what if it expired, but you didn't close it? Does it close if you don't?
I
No,
think
that would
stay.
shut off. You wouldn't have a card that functions, but the account would still be active.
Yeah.
The account would still-
And Kim, that's great advice, because remember I mentioned a couple things on credit cards, what's your available credit and what's your average length of account. If you start closing accounts you've had a long time, your score average, the average age of your account starts going down. That's a temporary ding.
Yep.
But what can be a more permanent ding, in preparation for this, I looked last night, we have $145,000 available in credit card debt to us in our home, right? Now, there's only 2 cards we have 13 accounts, and all the 11 cards we shred as soon as we get them. Don't even have the card, they're shredded. That's part of my self-defense, right? But the accounts are still open, and the balances stay at 0. So if I were to go on a crazy around the world cruise or something and spend $25,000 or $30,000, I could do that because the available credit to me is so high that I'm not gonna hit that 35% average. So if I have a card with a $10,000 limit and I close it, $10,000 just fell off of my overall total available. So because of available credit and age of card, if they're not charging a fee, you probably wanna keep it. When I get the renewals, I just shred them. I don't even activate them. An inactive account is not the same as a closed account.
And you would have to call them to close it.
I think it was like Target, I wasn't using the card. They actually just sent me a thing that they're gonna close it if I don't use it soon.
Yeah, a lot of merchants are doing that to save themselves expense. There's so many regulatory requirements that you guys don't see behind the scenes of maintenance and disclosures and things that have to be done. It's expensive if you have an account with anybody, whether you use it or not. It's an expense to that institution. So a lot of credit card companies have been, for the past 5 years, accounts that are considered dormant, they're just closing them. They have that right. See, they can close or call the entire balance due anytime they want to. It's in the really fine print, like in paragraph 87 that you never read. But anytime you want, they can call and say, okay, we're shutting your line, it's all due now. Or they can double your interest rate in many places. So you're paying 17%, you get put in their risk for missing 2 or 3 payments. Sorry, we're gonna shut off your access, but we're also gonna increase your interest rate to the penalty rate, and you're stuck paying that down.
Most often, we see that in department store credit cards versus like a MasterCard. Does that make sense? And I think there's a couple more questions.
Please.
On our Visa, credit card, and sometimes they have just automatically said, you're such a great customer, now you have this much available. Is that a good thing, or should you call and say no?
I think it's I would say, going to Kim's advice, I would talk to a banker individually, but I think it's a good thing because it just makes more available. It doesn't impact the tenure of your
Yeah, 'cause
account.
we're not using it.
Yeah, and those are done off of a soft pull, meaning it doesn't affect your score. There's no inquiry. They've just looked and said, let's increase their line.
Okay.
Different reasons, different people do that. You had a question a second, I'll
Yeah,
come
it
to
was
yours.
pretty much the same question though.
Yeah.
Like, would you like to increase your limit? And I'm like, not really.
No risk. I would do that just to increase the overall available, so what you do use, should use, it stays at a lower percentage. There's really no reason not to. That's how I got to the number I got to on ours. You want to increase? Like, sure, go ahead. And so it's not a bad thing in and of itself. It's a bad thing if you're afraid you'll go on a bender.
Oh, that's what I was just gonna say.
Yeah, that'd be a really bad thing. Yes?
On that note, sometimes it asks you to update your income. Is that worthwhile to you, or? is that
I would
something-
make sure that I would never hit the button in the email. I would always go to the website and log in, and then just go to the preferences and update the income. That is why they've increased limits sometimes. When it comes to credit, do we have a slide that talks about credit? There's really 3 things. It's what's the collateral, what's the credit, and what's the cash flow. So for example, if I want to buy a car, okay, the car's worth 20, we're not going to loan you 30. It's only worth 20, right? What's your credit score? Does it pass or does it not? Great, credit score is good, the value of the car is good, the payments are $10,000 a month and you make 3. That's not going to work. So the things we look for are credit score, cash flow, can you make the payments, right? And what's the collateral backing it up? So here's a little sneaky thing about credit cards. There's no security, there's no collateral on credit cards. It's very hard debt to collect. Professional cheaters know that. They'll run up 5, 8, they'll get right below the threshold of 10,000 in most states, then they won't pay anything. And the credit card companies really can't collect. They sell them off to debt collectors. Credit card companies only have 120 days to get a payment from you, or they are forced to sell it. They cannot keep it anymore. Otherwise, let's say I have $1 million in credit out there, nobody's paying me, but I have it on my books as accounts receivable. I look strong. I got $1 million coming into me. I may have 0, so they're forced to sell those off to collection companies. If you ever have a credit card company that sends them to a collection company, call me. Call me. Because there's a whole different set of rights you have. And the key thing is that once that happens, the person who you legally signed to make the debt to, yes, conveyances and assignments, and they can sell that to somebody else, but who they sell it to is not a licensed lender. You have no lending. They cannot charge you fees. They cannot charge you interest. They cannot threaten you with a lawsuit unless they have a history of following through. You have a whole separate set of rights. I've helped many people through that process. If you ever have credit collection companies calling you or somebody you know, just make sure they give them my number. Really love talking people through that process. You had a question? Somebody like, I saw a hand move.
So did that answer your question, Shannon, though? So you wouldn't want to do it through the email, but go in through the website, update it through there, so that you're not like making sure that that email technically wasn't a scam,
Yeah.
if you will. Nothing, I mean, it's not gonna pull like it's not gonna do anything to your credit.
Since you mentioned, collections agencies.
Yep,
People do go down on hard times,
absolutely.
and can't pay their debts, things get sent to collections. How long, when you're somebody who's trying to get your debt paid off, how long does it usually take on average for your credit score to go back up as you pay those off?
So it used to be a longer period of time. Credit scores change almost hourly or daily now. It's very volatile. Based on what's your credit card balances, that shifts all the time. There's a couple things in play. My mother-in-law is a good example of the other extreme. She retired, and she was probably about 68 or 69. She came over to the house just upset. These people, these insurance companies, they're raising my rates just because I'm old. I said, no, it's because you're female. Just kidding. Delete that. She had the same reaction, like, really? So no, she felt like it was age discrimination because her rates went up so much. We started talking through it. Maggie, have you had any claims? Has this come up? Does that come up? No. I said, let's go look at something. We looked, her credit score dropped about 70 points. Your life insurance, your home insurance, your auto insurance, they're all tied to your credit scores. Why did her score drop so much? She had no credit. How come she had no credit? She was debt-free. No car loans, no home loans. Bad credit stays on your report for 7 years. So does good credit. We see retirees 7 years after they get totally debt-free, their score starts to go down. Because all accounts after 7 years stop counting except for bankruptcy. That'll stay for 10 years. Otherwise, after 7 years, it's still on the record, but it's no longer affecting your score.
And to answer your question a little bit, it really depends on the individual and how, like, what is on the actual credit bureau right now. Because we've seen situations where we might do like a credit builder loan for a client where they didn't have, let's say, a consistent trade line of payment histories. And by just doing that, and then 6 months later, we actually seen a nice FICO score increase. And it was just because that particular individual and hit their circumstances where if somebody else did that, but they still have some things that are dinging their credit, their score wouldn't have, pivoted that much. So I know we're not answering your question directly because there's really not a specific timeline where credit can go from bad to good or good to bad. It really depends on the individual. And like David said, that's really a great question for a banker because then you can kind of go line by line. This is what I have, this is what I need to do, blah, 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 blah. And then we can kind of go through a plan of trying to figure out what's the best way we can increase this FICO and the fastest.
So in the example with your mother-in-law, so does she not have a credit card, or is a credit card that you're making regular payments on, does that not count in a good way towards your credit score?
Yeah, great question. There was no installment loan, so her score got really soft, and we think she was like an 18-year-old with 2 credit cards. But she was like a 69-year-old with only 2 credit cards. There was nothing else underlying that, so the score begins to deteriorate. One other note on collections, the 7-year thing where a note stays on your credit and affects your profile, if you had a collection account that was 5 years ago and you make a $1 payment, the 7 years starts over. Any financial activity re-triggers that 7-year reporting period. So as I say, if you ever know anybody that finds themselves in a situation where they're getting calls from collectors, it really is an individual conversation to say, does this make sense? What steps should you take? Because you can negotiate with us sometimes. Hey, I will pay you, and I will pay you this many pennies on the dollar, and only if I get a signed agreement for you saying you will not report it to the credit bureau. Because once that reports, it hurts your credit for 7 more years. Date of last activity is the trigger point for that activity, for that event to report. You got a question? Oh, we got your question. Did we answer that okay? What other questions have we introduced? Because I think we're now at the Q&A period. Yes?
Silly question, so just kind of thinking down the road with my kids, is it a better idea to give them like prepaid debit cards or just prepaid cards in general for like gas purchases, or should I give them one of my credit cards to use?
So that's a great question. There's some risk. If you give somebody your credit card, even if it's your child, you may be responsible for fraud on that card. It gets tricky in the way that may come back at you. So I'll tell you how I'm doing it, and that's not because that's how you should do it, but it's what makes sense to me. My 16, 14, and 11-year-olds all have debit cards. As soon as they're 18, I will give them a credit card. I'll co-sign a card for them. I want them to learn how to manage credit. I will get them a credit builder loan with BMO Harris Bank. It is the best out there. We had a first-generation immigrant go to our Lake Street branch a couple of years ago with no credit history. It was a credit ghost, we call it. Set her up with a credit builder loan. About 4 months later, got her a store charge card. I think it was a Target card. And about 4 months later, got a BMO credit card. Now there's 3 trade lines, the minimum for a home loan, 1 installment line, the minimum for a home loan, and about 6 months later, and within 2 years of visiting the branch, she bought her first home. So you can build credit quickly, and I would encourage everybody to do that with their kids as soon as they can. I'm trying to teach my kids to navigate electronically. Also, one of the reasons I use cards for everything, and my wife and I are great partners here, there's oversight. I guarantee, I would bet you everything that you're willing to lose. Give me $500 in a week, I'll tell you, I have no idea where it went. Cash is my enemy. It just disappears because I don't care. I'm like, I can't remember spending that. That plastic record is both great for taxes and accountability. And when you look and go, really, $98 on coffee this month? That's only $1,200 a year, why not, right? It can jog your attention to things. So I teach my kids. Yeah. I do go over about once a month with my kids what they're taking from their accounts, and we go over their expenses, and we talk about was that the right thing to do. So we have that record, and they're learning how to handle plastic, and I know they're protected from all fraud when it's their card. So, yeah, my 11-year-old has his own debit card. have a checking account with my name and his both on it. So that's how we're navigating that. I'm training them for the future because they'll never write a check. And if you rob our house, you probably get coins. Nobody in my family has cash.
And even in the banks, I mean, most, at least all the banks that I've seen, we don't even carry like the register. I mean, we have to look for a register, like, you know, little hand registers that we use to keep track of all of our checking account. Like, they're hard to find. Like, our bankers would have probably a hard time finding one.
Yep.
So it is really important. I think I do a lot of classes for youth, and it is very important as we're starting to teach our youth how to use money. We have to think, how do they see things, and how are they, what's going to be attractive? Like, if I handed my kid a checkbook and a register, he'd be like, what is this? Like, well, I don't even understand this, right? But they already understand. My son already knows that that card that I use is attached to something, and he's 11. So they're going to learn faster, and as they get older, it's going to be more and more. I mean, they get Amazon, like, literally today I could get whatever I ordered. Like, everything's so fast, and I think it's really important. I think the best advice when I give classes to parents is just be talking to them about money, because if we don't, they're just going to learn through the internet or learn through a friend or learn however because they are going to just grab the information from someone else. So I think it's important, and they don't teach a lot of classes in school. I mean, we still have a few economics classes and things like that, but when it comes down to it, even like when I do classes in college, they're like, wow, I wish this class would have been given to me when I was a freshman in high school, because then I would have actually probably made some better decisions when I got out of high school. So I think it's really important that we seek out, and there's lots of different resources out there. I just was talking to a parent the other day. We were talking about how to teach our kid how to do different things, and we were talking about allowances and all that kind of stuff, and literally I pulled it up. There was probably 20 different apps of just budgeting or kids savings and things like that, and I use an app because my kids know what apps are, and there's an app for that, right? There should be a slogan. I should copyright that or something. But I have an app, and I showed her. I'm like, here it is. There's a chore chart. Here's what they get each month, each week. If they do it, they can spend it. I can reward them. If they decide to put that money, because it's not technically money yet, if they decide to put it in the bank, I mommy match it. So I match up to 50% of what they're going to put in. So let's say they earned $100, and now they want to take that $100 and actually put money into the bank. I'll give them 50. And my son, at first, always wanted to spend that 100. Like, he wanted to buy that toy, and I would deduct, $15 right out of his app. So he's thinking, okay, this money's going away. As soon as he figured out he could make money. Now he's like, Mom, can I take 100 and put that in the savings account at the bank? Yes. And he's like, that's 150, right? Yep. So he's learning the concept of, if I save it, it could actually grow, or if it doesn't. So there's lots of apps out there that I think are great tools to really kind of help. And that didn't answer your debit credit question, but I think it's important. I think every kid is different. Like, my daughter, I probably am not going to trust with an actual credit card, because she's 10 and loves to spend. So they're both going to be different. I think they're both going to have a different lesson when it gets to the point of having that card in front of them.
That's a great answer, and I'll share about my kids. 16-year-old saves everything, my 14-year-old gives away everything, and my 11-year-old spends everything. Straight up. They are so different and radically different. Radically different. We tried that method of they earn $1, 70, the first 10% goes to a nonprofit, the next 10% goes into a retirement account, and we set up sort of some of that. The next 10% with the savings, the 70% after that, do what you want. One puts it all in savings, one spends it all, and one gives most of it away. So there is personality that comes into how we handle this, and that would be situational in how you want to handle it with your kids. And that one way to find out what mistakes they'll make is to give them the tool. And I agree with you, that checkbook ledger thing, it's like giving my son a chicken and a knife and saying, here, let's make dinner.
So I'm
I
a
just don't do
banker,
that.
and I use those registers with all of my new customers who have never had an account before. So
There's a preference there.
There's a lot to be learned, like that you can learn with that for
Yep.
somebody who's
Absolutely.
clueless.
I'll touch on that really quickly because I know we're running low on time. Checks are a great source of risk for you. The way that, and we see this in the Twin Cities, one of our branches today is going to process a fraudulent item. All it takes, and the same guy, Frank Abagnale, told us in 2016, the FBI knows that street gangs are moving towards check fraud, not drugs, because you don't go to jail for check fraud. And it's exploded across the country. All it takes is getting a kid who's clean to process checks at Dakota Electric, and they're just putting checks in the system, but every once in a while they take a picture with their cell phone. Within hours, they can digitally reproduce exactly your signature, your check stock, the MICR line, the account number, and they'll run a bunch through your account very quickly. Giving your physical signature on a check is a horrible idea. If you have to pay something with a check, like we tell our customers, go to BMO Harris online, pay through the web bill pay. It's a free service, and if I wanted to send Kim a check, I'd put in her name, address, and the amount. The bank sends a check on my behalf, doesn't have my signature, and it's fraud-proof because of the process it goes through. Your bank may offer the same. We tell our clients, if you have to write a check, do it online. We'll lick the envelope, we'll put it in a stamp, we'll write it. It's a free service, and your cheap deluxe checks that can be easily reproduced
It
never
doesn't
hit
have
the
your
street.
signature and it does not have your account number. So when it goes to that receiving person, they don't have any information to take.
We had a business client open an account with us. This is only, I'm still dealing with this issue. 3 weeks ago, within 4 days, 4 checks were deposited at a local credit union and cashed. He never even got checks. We didn't even order him checks. But 4 checks cleared his account that quickly because somebody got the check and routing number and started reproducing checks on a bank check stock, and they had his signature. Where did they get it? We don't know, but they had his signature. But that's check fraud. It's very risky because you may not be protected from that. It's now, I think we're in week 3 and he's still waiting for his money back. The police are involved, the 2 banks are involved. He's got bills to pay, but that money may be gone. Electronic transactions, you're always 100% protected. If you do have to write a check, use an online bill pay system. Or find, somebody mentioned they use Venmo or Zelle. Yeah, use electronics, it's so much safer.
So that kind of wraps up, but we can take a few more questions. I know we have about, 7 minutes, 8 minutes. So if anybody has any more questions, definitely let's do that. I do want to remind you to do one thing, and I forgot to tell you at the beginning. There's a little sheet in front of you. It says Financial Priority Worksheet on the top. It's just a way for us to see how we did today as we presented. It also is a way, if you do want to connect with a banker, that we can connect with you. And then most importantly, it gives us some ideas of what you guys are looking for when it comes to financial education. Like, what topics would you guys like to hear more about? We always are trying to mix that up and, do different topics and do different things. So if there's something that you haven't heard or maybe you would like to hear, even if it's not even on there, please write that down. We'd be happy to get a class going so that we can bring the topics that you guys are interested in. So I'd love the opportunity to go through those. So fill that out for me if you would. You don't have to fill out your personal information if you don't want, and then we'll collect those at the end. Any other questions? Was that helpful? There's lots of stuff out there on credit cards, right? I mean, if I were to Google credit cards, I'd get millions of different hits. So lots of things. I think the biggest underlining when it comes to credit cards is really talking to your banker and talking to them about your personal situation. So whether that's you've got one credit card or you've got 20 credit cards, what should I do? How should I manage that? That discussion is going to be different with every single one of you because we're all different. We all spend money differently. We all save money differently. We all are impulse, there's certain things impulse buy, like I'm a Target. I think if you've had my classes. And by the way, if those of you, I know there's a few who've been in here, I decided to stop shopping at Target. And this, don't post this, Target might ban me. No, I still shop at Target, but I don't get my groceries there, so I make it very specific that I have to go there for something else and not my groceries, so I've separated things. So just so you guys know, in case you were worried about me, because I know I say I call it the $100 store instead of the dollar store, I have cut back and I'm budgeting way better, so just so you know. Anyway, any last minute questions? My card is on your table if you have any questions, and I would be happy to answer them. Again, we're not here just to sell you an account or sell you a product. We're really here to help you and navigate through your financial situation, and we'd love to answer any questions that you may have.
On that, I have one final thought, and I tell all my clients this. If you find yourself currently in a situation where you have a credit card balance that you cannot pay off in full, then contact us. It'll be a private conversation. There's many methods to shift that debt into something more favorable than the place it's in now. There's a lot of ways to restructure that. Zero interest options sometimes, fixed options. Don't keep doing what you're doing thinking it'll get better because you're paying a lot of interest in doing it. If there's anything I'm an expert on, it is how to pay off credit card debt. So please reach out. It's private. There are solutions. Do what you can to get rid of that debt. Figure out why it got there and then navigate forward. But we are a resource for you to help you get rid of that credit card debt and move it into a place that's more appropriate for your finances. Okay?
Perfect.
Thanks, guys.
All right, thanks everybody.